We are on Commodity Watch, and some of the biggest moves this year weren't in oil or gold, but instead in cocoa and coffee. Cocoa prices more than doubling this year. It's the top performing commodity of the year, and supply concerns and thin trading are kind of driving that action. For coffee, on the other hand, it's up more than 70%, and that means that for you, probably likely higher prices at the grocery store. So joining us now is Phil Strebel. He is a Blue Line Futures Chief Market Strategist. Please talk to us about some of the recent market action that we see in the softs here.
Yeah, if you look at the soft commodities, I mean, these have been explosive. These have way outperformed some of your basic commodities out there, even your stock indices. When you start to play some roles like weather and consumer demand and export restrictions, as well as competition to secure supplies, they all become these drivers of these various commodity markets. And then, of course, again, not only the weather, but the infrastructure here. Many of these commodities are grown overseas, and they lack the resources here to really hone in and drive excess supply out there. They've got a lot of products out there that are just more healthy made. They don't have genetic modified seeds and things like that. So these commodities are very susceptible to any kind of adverse weather scenarios. And that's where you get these products like cocoa and coffee really moving higher, especially with drought and flooding concerns.
Yeah, I mean, we've seen incredible spikes here, Phil. Something we've been talking about today has been the weakness that we've been seeing in other types of commodities, in part because of the inverse trade with the U.S. dollar. When you're looking at the softs here and these sort of supply shocks, how do you factor in the dollar to all of that? Would the moves be even bigger, for example?
I mean, the dollar has been a benefit for us because of the fact that we're a net importer of these. It would be really problematic if our dollar was extremely weak against some of these foreign currencies. So it's really helped out from that stance. And many of these commodities where they're grown at, we don't really have these like a tariff war going on whatsoever. Other than Mexico, there's a little bit of concern about it. Mexico is the largest agricultural trading partner with the U.S., but other commodities out there like sugar and cocoa and coffee, we just have less risk there. It would be more retaliatory in nature. But a lot of these commodities, again, when you get to like things like cocoa, you know, it's the top performing commodity, but the problem is that you have a poor harvest in the Ivory Coast and Ghana, where most of the commodities grown, the weather and the infrastructure related issues. They've had diseases in these crops that have caused rotting of the seeds because of the poor weather conditions. And then the stockpiles, they're just driven down because of the resilient customer. You look at the economy this year, it's been quite well. The consumer has been quite strong. And then the makers of these products, they really struggle to compete to secure supplies out there. Remember, the U.S. is the largest consumer of chocolate and coffee. It's just about everyone's favorite, thing to drink.
Yeah, and so that brings me to when I'm going to feel it, Phil. Where am I already? How quickly do these types of price spikes tend to make their way to consumers?
Wholesale prices have gone up 30% in the last 2 months, specifically on the coffee market. I mean, everybody, they kind of look at where eggs and beef and things like that, because those are staples. You start getting into coffee and cocoa, orange juice, they become a little bit more exotic of a product, but it becomes just second nature where, you know, maybe you're buying these basic commodities that you need in your household and you're putting a few things back. So people are feeling it, but maybe perhaps the fact that like other areas such as energy prices have come down quite a bit, maybe they're getting relief in certain areas. I know Jerome Powell said that some of the inflation areas have gone up in certain areas and they tend to OODA loop amongst one another, but they are remaining at these elevated levels right now. So I think that really the inflation, it's going to be here to stay. Now, it's a question of how does Trump's policies impact a lot of these different commodities, and do they start to cycle upwards is a whole nother thing.
Let me ask you about the metals here. We got under a minute. What about gold? Still up 28%, not as high as some of the softs we've been talking about, but the precious metals and just how that relates to inflation and Trump here.
Well, it really came down when you saw that only 2 interest rate cuts are expected in 2025 and 2026. If we do see inflation start to come down or the consumer more importantly, starts to break down and we see the labor numbers, like initial claims, start to stick up while you have that high inflation, you create stagflation, and that's where you get that level of gold futures starting to head higher. Also, central bank demand, if that continues to pick up, we saw China restart those, that's where you get gold futures going up as well.
Phil, good to see you. Happy New Year. Thanks for your time today.
Yeah, thanks for having me.
Turning